Hello everyone, and welcome to this presentation of the correct way to trade with candlesticks. Welcome, my name is Stephen Primo, the president and founder of Specialist Trading. Thanks for taking time out of your Wednesday to come to this presentation. This promises to be a really good end of year presentation because I'm going to be sharing with you a specific technique for trading with candlesticks that I really think will increase your odds for success. The reason I say this is because it's one of our most popular packages that we have at Specialist Trading. We are first and foremost an educational company. If you're not familiar with our company, we are mainly educators that we just want to teach you and educate you with all of the tips and techniques I've accumulated in my trading career so that you can ultimately make your own trading decisions. It's my belief that the reason why most traders fail is because you're relying on outside sources to tell you what to do or how to trade, what the perfect time frame is. But once you get the proper education, what we really feel is that you'll be able to make your own decisions. Come here for training to be my personal student of 38 years of mentoring behind me and hopefully to educate you, and then you can go on your own. Now, the reason I say this is because I've been trading for 38 years, and I started out on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of them I was a specialist. So in that time I was trading on the floor, I saw and traded myself and was involved with just about every market environment, every strategy that you can think of. So I know in that 38 years that I've been trading what works in terms of consistency and what doesn't. So what I do is educate and teach all of my students the actual things that I have accumulated and that I currently use in my own trading. So that's what we do at Specialist Trading. Now, as I said, I have a great presentation for you today, but we are required to show you this first. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using what I feel is the correct way to trade with candlesticks, but please remember that we can in no way guarantee that any of the results will be repeated in the future. So as you are once again taking a look at our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. As you see here, here's our handle. You may want to write that down at SPCLSTTRADG. I post daily information anywhere from just financial tidbits that I've accumulated along the way to actual signals that our strategies have generated. So you can see a lot of information on Twitter, but being that it's rather limited, there's more information to follow us on Facebook. So our sister site, I should say, is Pro Trader Strategies. They've put together a Facebook account, and you can log on to Facebook and like us on there. And there's a lot more detailed information as well as videos to see what we're doing and a little bit of background about myself. All right, so we've gotten that. Now let me just go into the philosophy of what I feel is really important, especially about this time of the year, because as I stated, I've been trading for 38 years, and as long as I've been trading, everyone at the beginning of a year starts out saying the same thing. It doesn't matter if you've been trading for 50 years, you've been trading for 50 weeks or 50 minutes. Everyone starts out January thinking this is going to be a great year. I have all these plans and hopes and dreams and goals of what I wish to achieve by the end of the year. Most people would like to make a little extra added income. Some people would like to make a living off of trading. Other people would just like to pay for that dream vacation so that they could have some extra money. Either way, everyone has a plan, and I can honestly say in my 38 years of trading, about 90% of most traders never reach those goals. In fact, they really fall far short of even attaining them. In fact, many traders, I would say oftentimes the majority of traders, do even worse than they imagined they were going to do and worse than the prior year. And once again, I think this is because of faulty education and relying on things that really have no basis for consistency. Once again, I know this from firsthand experience because my first year or two of trading, I had a very difficult time making ends meet. I mean, I couldn't make a dime. I was trading and doing all the things that most people were taught in all the seminars and all the books, but it just wasn't working for me. And that even speaks for candlestick trading. I even went to someone who had been working in a Japanese bank. This was in the 80s, who taught me how to trade with candlesticks. And I knew all of the different formations and the patterns, but I still couldn't make ends meet trading with candlesticks. So the basis for all this is that we're trying to get you back on track so that you can hopefully start 2016 much better than you started 2015 with this technique I'm going to be sharing with you today, and hopefully become one of my students so that you can get on track and eventually get to that spot where you want to be by the end of 2016. So my goal, as you see here, is not to simply trade for you the way so many other sites do. It's not to tell you what to buy or what to sell. It's to teach you these things, the same things that sustained me, so that you'll be able to trade with the specialist edge. The specialist edge is really rooted in simplicity. So this is what specialist trading is all about. We're an educational company. We just provide you with the tools, the information, so that you can go on your own. All right, so we're going to start out by asking a question: does trading candlesticks with conventional wisdom work? Okay, now before we go into it, once again, I know that a lot of you may have questions along the way, but if you have any questions, kindly wait till the end of the class, and we'll take the time to have questions then, and we'll answer anything that you may have. If you're having difficulty with your computer, I know some people have questions about the sound or the visual aspects. Sometimes the best thing to do is to log off and then to log back on again. But if you are really having technical difficulties, or you can't stay for the entire presentation, you can request a link to this, because we are recording it, and you can get a full recording later on, okay? All right, so let's begin. Remember, just wait till the very end to ask any questions. So I'm going to start by asking you a question. Does trading candlesticks with conventional wisdom work? All right, this is the big question here, because I'm sure most of you have tried or are currently trading with candlesticks in your personal style of trading. Well, for those of you who need a brief refresher course, let's just look over some candlestick patterns. These are the vast majority of candlestick patterns, probably the most popular ones, anywhere from dojis to evening stars. We're just going to focus on one, just so that we don't make things too complicated today. We're going to keep it very simple today, but the technique I'm going to be sharing with you can virtually use any of these candlestick patterns, but we're going to focus on probably the most popular and easiest pattern to identify, which are engulfing patterns. All right, so a brief recap of what an engulfing pattern is. There are bullish and bearish, obviously, engulfing patterns. They are two-bar patterns, as you see here. It doesn't matter what time frame we're looking at. You can see a bullish engulfing pattern in a 5-minute time frame. You can see a bullish engulfing pattern in a monthly. So it doesn't matter. It just requires two specific bars. All right. Now the first bar is usually an open to close of lower. That's where you have the dark body. You open and then close lower. And bar number 2 usually opens and closes higher. What we're looking for is the range of the open to close range, not the entire range, but just the open to close to totally engulf the open to close range of bar number 1. Okay. Now a lot of people think, well, do we have to engulf the extreme high and the extreme low of the wicks? No, that makes no difference. We're just engulfing the prior day's open to close range. Now this is a more traditional engulfing pattern, because day number 1 is usually a down day, followed by day number 2 being an up day. But it doesn't have to be a down day followed by an up day. It could be actually 2 up days. All we're really looking for is that the open to close range of bar number 2 totally engulfs the open to close range of bar number 1. Why? Because there is a very strong edge here that price will continue in the direction of bar number 2 for the next 3 to 5 bars. So that's a great edge to have in your favor. Now conversely, a bearish engulfing pattern is once again a 2-bar pattern. Does not matter if these are tick charts or monthly charts, it makes no difference. But the open to close range of bar number 1 is usually higher. You open and close higher. That's why you have the open body. And then bar number 2's open to close range is lower, and it's down on the day. Therefore, you get the bearish engulfing sequence. But what we're mainly looking for is bar number 2's down day to totally engulf bar number 1's up day. All right, this is the standard format. Now, once again, it really doesn't matter in the traditional sense if this is an up day. This could still be a down day. The main thing that is required is that the open and close of this down day of bar number 2 totally engulfs the open and close range of bar number 1. Okay, why? Because there's a high probability that you will continue in the direction of bar number 2, which was down, for the next 3 to 5 bars. Okay, so here's the standard definition of engulfing patterns. The engulfing candlestick pattern is a reversal pattern, and this usually occurs at the top or bottom of a trend. So the way traditional or conventional wisdom tells us to trade engulfing patterns, or for that matter, most candlestick patterns, is that they're reversal patterns. So if you're in an uptrend, you want to find one of these patterns, because that's telling you that the trend is going to reverse and you're most likely going to be headed lower. Conversely, if you're in a downtrend, you want to see one of these patterns, in this case, a engulfing pattern, because most likely the downtrend will stop and you will start to go higher. So if we look at this older chart here, CVX, all right, conventional wisdom would tell us that, well, we're in a downtrend, we're going lower, okay? And what do we see here? All of a sudden we see a bullish engulfing pattern, okay? Because we're in a downtrend, so we want to look for some type of reversal. So here's the bullish engulfing. Remember, it's a 2-bar pattern. Bar number 2's range totally engulfs bar number 1's range from open to close. So this is telling you, because we closed higher, that this is bullish and that most likely the trend, the downward trend is stopping and we're going to go higher. All right, once again, this is the way I was taught. This is conventional wisdom telling you that candlestick patterns are reversal patterns. So let's just say you step in and you buy here. And look what happens, okay? It goes up for maybe 1 or 2 or 3 bars, but not enough to make any money, and then goes lower. So you start to say, boy, either you got stopped out with a relatively large loss, or you're still holding this, like I would say the majority of traders do, and hoping and praying for it to turn around. And then all of a sudden you see, well, I guess we're still in a downtrend, but you know what? Here's another bullish engulfing pattern. So maybe I got in a little too early. I'm going to double down. In other words, I'm going to double my position. And after all, I won't need it to go that far up in order to break even. So you buy some more, and this happens. So does this look familiar? Now, don't get me wrong. The conventional way of trading candlestick patterns, or for that matter, bullish and bearish engulfing patterns, will work from time to time. But in my 38 years of trading, I have found no consistency in trading it the traditional way, as reversal patterns, in other words. So how do we increase our odds for success? Because basically, we're just hoping and praying that a trend is going to stop when we see these patterns. Well, candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Do you see how this goes against everything we've been taught before? As we stated earlier, the conventional definition of trading with candlesticks is as reversal patterns, meaning we're going to come to some specific spot when we see a candlestick pattern, the trend is going to reverse. It's either going to bottom out or top out. But now we're saying, no, we're not looking for a reversal pattern. We're looking to trade them in sync with the trend so that we continue with the trend. Now we're going to have the wind at our backs. Now we're going to have a nice momentum going so that we can continue in the direction of the trend. You see how now we've increased our odds for consistency, because we're not trying to pick tops and bottoms with these reversal patterns. We are now trading in sync with the trend. In my 38 years, this has been the only style of trading candlesticks that has worked for me. Once again, I know there are many traders that do very well trading candlesticks the conventional way. All right, I'm not going to say that they're doing anything wrong, but to tell you or try to teach this is very difficult, because most of those traders, probably only 5% of all traders, are able to be consistent trading that way, because they're seeing or visualizing a pattern that the rest of us aren't. The 95% of us who can't trade candlesticks that way need something a little bit more consistent. And I have found that when you use them in sync with the trend, that's how you increase your odds for success. So here are some trending tools that you can start applying right away to be in sync with the trend, and try them for yourself. I'm not going to tell you to go start trading this today, but start checking out for yourself to see if it really works. First of all, a lot of people have difficulty in discerning what the trend is, because every educator, every webinar I'm sure you've gone to, everybody has a different idea of how to find out what the trend is, okay? Everyone has a real idea of what the best thing for the trend is. And here are some of the best I've found, and that are very simple. They don't cost anything. It's simply use indicators. Now, a lot of people will like to use moving averages. If you're an intraday trader, a lot of people like to use anywhere from a 10 or 13 period moving average to a 20 period moving average. If you're more of a swing trader, you might go for a 50 or 100 period moving average. And if you're a long-term trader, use 150 to a 200 period moving average, okay? Those will tell you the direction of the trend. Not great, but they're okay, all right? Or other people still like to use patterns. Often used as a higher high and a lower high tells you you're in an uptrend. Whereas if you have a lower low followed by a lower high, well, now you're in a downtrend. So these are specific ways to figuring out what the trend is. And then lastly, you can look at time frames. So many traders like to find out what the daily is doing in order to trade a 60-minute chart. Once they are in sync the two trends are in sync, well, that's what your true trend is, okay? So you're using the higher time frame to be in sync with the lower time frame. These are all valid. They all have some level of consistency, but you know, for my standards, once again, that I want to really try and teach my students and have you reach the highest levels of consistency, they're just okay. But you can start using them as soon as today if you like. Once again, please paper trade if you're going to be using any of these to trade candlesticks. But let me tell you what I think is the best tool to use for being in sync with a trend that I probably have not found anything better in my 38 years of trading. And that's the PET D. All right, a tool you've heard me speak about literally hundreds of times here because it's such a great tool. I use it on a daily basis with my own personal trading. And it's one of the most popular tools we have for our members at Specialist Trading. What it is simply a color bar algorithm. All right, it's a proprietary color bar algorithm. You see a series of green bars, well, then you're in an uptrend, a short-term uptrend. You see a series of red bars, well, then you're in a short-term downtrend. That's how simple it is. It really doesn't get any more difficult than that. So there's no different time frames to have to figure out what's going on. There's no patterns to look at. Everything is right in front of you just with the color. With the use of high-speed computers and also with programmers, we've been able to make this into a color bar algorithm that really simplifies it for all of our students and for all of our members. So how are we going to apply this then with candlesticks? Well, here's specifically with engulfing patterns. Once we get an engulfing pattern, all right, doesn't matter what the market is, doesn't matter what time frame. Remember, the engulfing patterns are 2-bar patterns. We're only going to buy if the engulfing bar, which is bar number 2, is colored green. That's it. Every other bar could be red, but if that bar is green, then it's okay to buy. That gives us the consistency and that gives us the confidence to actually take the trade. So let's look at this older example here of SYY. Someone looking at this would say, well, Steve, there's really no trend here. I like to look at a higher time frame to tell me what the lower time frame is. And there's no real trend here on this daily time frame because the weekly is going sideways as well. So I'm going to stay out of this. Well, as we look here, we see that we have a bullish engulfing pattern right there. But if you had used that measure of finding out what the trend is as your indicator, well, then you would have stayed out of this because you don't want to trade during a rangy market. But if we would have added the PET D, remember, if we want to take this, PET D must color bar number 2 green. So let's add the PET D and see what it had. Well, as you can see, the PET D was coloring this entire time frame before. All these bars were red. So it was telling us we were actually in a downtrend, even though we were looking as if we were just going sideways. But once we started to get some more consistency with green bars, now we've changed trend and bar number 2 is colored green. So we have a green light to actually take this trade. And the stock went up 5 points in 1 week. Okay? See how simple that is? That's a bullish engulfing pattern. Let's look at a bearish engulfing pattern. It's the same thing with the PET D, except now we're only going to sell if the engulfing bar, which is bar number 2 again, is colored red. So it doesn't matter if all the bars are green. If bar number 2 is red, that's fine. It's okay to take the trade. We have now increased our odds for consistency tremendously. So if we look here at this older chart of DVN, once again, with conventional wisdom, someone would say, well, we're in a downtrend, Steve, and I want to be looking for bullish engulfing patterns to pick a bottom. But remember, we don't trade that way anymore. We want to look for bearish engulfing patterns. Okay? Why? Because we want to be in sync with the trend. But how do we know the trend's going to continue going lower? How do we have that confidence to take these? Because, you know, we've always been taught, well, gosh, how can I sell in a downtrend? I'm supposed to be looking for bottoms here with bullish engulfing patterns. Well, you just simply add the PET D. Remember, bar number 2 needs to be colored red. So once we add the PET D, well, guess what? All the bars are red. So we don't have any worries that we're in an uptrend or that we're bottoming out, because the PET D is the best translator I know for the markets. And what it's telling you is that the market wants to go lower. Why? Because the bars are still red. So we're going to short these 2 bearish engulfing patterns in a downtrend, and look what happens. The stock went lower. Okay? Now, let's say you feel comfortable, but you're still a little bit scared and you still think, well, Steve, you know, this has got to end. we can't be for a downtrend that much longer, so I'm going to look for a bullish engulfing pattern. And we have two bullish engulfing patterns right here. Don't take the trade. Why? Because in order to take it, both of those bars, the bar number 2, would have to be colored green. And are they green? No, their outlines are red. So we're not going to take the trade. Remember, we can only do it if bar number 2 is green. So you bypass those, and it's a good thing you did, because the markets were still telling you we're going lower. So remember, if the trend is down, you want to look for bearish engulfing patterns. And here's another one. Now at this point, you're probably saying, how can I go short this? I mean, we've gone down so far, and the market is still telling me it's going lower? Yeah, it is. And the bearish engulfing pattern, along with the trend, is increasing your odds for consistency tremendously. So you close your eyes and you pull the trigger and you sell, and it was a good thing you did, because it did go lower. So you see here, had you taken the very first setup right here with these couple of trades here, that would have generated 25-point gain in just 2 months. Why? Because you have the consistency of using candlesticks, but you have the consistency now of adding the pet D because you're using them in sync with the trend. If you had tried to use candlesticks in their conventional way, which is trying to find a bottom, you would have lost a lot of money. Remember, in my 38 years, I have found no consistency in trading candlesticks the conventional way. That's just my own personal observations, and I like to trade candlesticks this way. This is how I have been able to generate gains. Now, once again, I noticed some people have come in later. If you've come in late, remember, we'll take questions at the very end. I'm not going to answer any questions now, and please hold off till the next 15 or 20 minutes and we'll get to the end, okay? All right, so let's look now at some more recent stock examples. These are things that happened anywhere in the last couple of months to the last couple of hours. I took a couple of examples just this morning before we started. All right, let's start out with PSA. Now, we realize this is an expensive stock, PSA, but just to show you that many of our members use this technique to purchase options. You don't have to purchase the stock. We realize that if you were a stock trader, you can only buy a small odd lot, but we have a lot of people who like to trade options. So rather than just simply buy or sell the stock, they'll just purchase directional calls or puts. Now, right off the bat, just off this short example here of just about 2 weeks of trading PSA, we know what the trend is because the pet D has colored all the bars green. So even though it may appear we're going sideways, that's not true. This is the beauty of the pet D. It's so finely tuned that even with a small sample size, it can tell you the direction of the trend. So we're going up. So do we want to short anything? No, we only want to be in sync with the trend. So if the trend is up, we're not looking for bearish engulfing patterns the way we have right here. It would be silly to take that because bar number 2 is colored green. We are looking for bullish engulfing patterns as we find right here. So this is the one we're going to take. And so if you would have taken that trade roughly around 210, you see the market went up in the next week or two up to 220, 10 points right off the bat, okay? Now at this point, you would have said, okay, well that was a nice run, but I just don't feel strong about this. I've never used candlesticks this way, so I want to take this sell signal. Can we take it? No, because the pet D is coloring bar number 2 green. So we have to just simply, bypass that. And if we want to get back in, well, we can look at this bullish engulfing pattern here. Here's another one. So look what happened. We went from 220 all the way up to 235. Now this market starts to run into a little trouble, starts to kind of go up and down in a little range here, but the majority of the bars are still green, and we have no bearish engulfing patterns. But what do we have here? Well, we have another bullish engulfing pattern. So what is the market telling us? It's telling us that the trend is still up, and it's telling us that we have a sign based off of candlesticks that the market wants to go higher. So are we going to short anything? Absolutely not. And so the price was roughly at 230, and it went all the way up to 245 roughly. So had you taken the very first setup, that would have gained 35 points in 2 months. Now we know that not everyone is going to, stick it out for the entire full amount of profits, but that's how much you had to work with just by using these 2 simple tools. You see, trading is really simple. It's just us as traders who make it more complicated. We've all been taught, myself included, some 38 years ago, that the more complicated your trading plan is, the more valid it will be. But in my 38 years, I found that it's the exact opposite. It's the simpler patterns that work. So all we're looking for is a candlestick pattern and that it's confirmed and verified by the pet D. That's it. Those are the only 2 rules we have to follow, okay? Now let's look at this chart in FOSL. All right. Once again, someone looking at this in September coming into October would say, well, Steve, no real trend here. The higher time frame of my moving averages are kind of going sideways, so I'm not going to do anything. Well, that's not really true because we add the PET D. We see here that the majority of bars are red. Now, even the ones that were colored green don't really show us anything until right here, where we have a bearish engulfing pattern. Okay. Now, is it validated by the PET D? Yes, because bar number 2 needs to be colored red in order to take that signal. So we don't have to use all these different indicators to tell us what the trend is. We don't have to even look at a higher time frame. The only time frame we're interested in and considering is the one we're looking at. Remember, keep it simple. So this time frame is telling us that this is a valid candlestick pattern, a bearish candlestick pattern, and we can take the trade. So guess what? The stock continued to go lower all the way down. And if you notice, there were a number of signals that were generated as well coming into November. Now, you could have taken each one of these setups for a small gain, and that would be perfectly admissible. Or if you wanted to, you could have held out for the nice drop that came just a couple of weeks ago in mid-November, mid to the end of November. Okay, now obviously there was some news that came out that made this stock drop, going down from 50 all the way down to 31 or 32. Now, were we aware of any of the news? No. The only thing we were looking at was the direction of the trend, and that was given to us by the PET D about 3 months earlier. See how the PET D is the only thing you have to listen to. We don't have to listen to news. We don't have to worry about what's going on in the company. I stopped looking at news over 30 years ago, and I'm still trading. So why complicate things by giving you too much information that you have to discern and figure out what it means? The only thing you have to look at is what are the color of the bars, and then what pattern or strategy am I going to apply in sync with the trend? That's it. How about KLAC? Excuse me. Once again, we're basically in a range market here, but if we apply the PET D, well, it's telling us that, well, we were in a downtrend, but since the beginning of October, we haven't been in a range at all. We've been in an uptrend. And in fact, we had 2 bullish engulfing patterns while we were in that uptrend. So as far back as the beginning of October, we knew to go long, and we could have gotten long roughly at 51 or so, 52. This was in KLAC, and look what happened once again. A nice big gap up move, roughly 64, 65, and that would have gained 18 points in 2 months. As always, we had no idea what the news was. Even after most of our students took this trade and made a nice profit, they didn't look to see what the news was. We really don't care. All you know is that you were in sync with the trend, and you see how trading in sync with the trend will get you much more consistent as opposed to trying picking tops and bottoms. KMI, all right, here's another example, and I just want to show you this also because, I'm not going to sit here and tell you that every trade works out perfectly. From time to time, as with any strategy, you will have some small minor losses using this. But the only thing is that I think separates us from other strategies and other educators is the consistency level. Remember I said we're all about consistency. We're not trying to sit here and tell you that you're going to make 1,000% gains in 1 month. We don't believe in that. We're educators trying to get you on the right track so that by the end of 2016, you'll be able to say, boy, I did much better than I thought I would this year. This is the first time I've done better in years. I've met all my goals and I've even exceeded them. So we're just trying to give you a plan that gives you 2 steps forward, 1 step back. Now right here you had a bullish engulfing pattern, okay? And as you can see here, it didn't really work out because the very next pattern you had was a bearish engulfing pattern. So this would call for you to take a small minor loss and switch because the strategy is giving you an entirely different directional setup. So you would have taken the loss and now you're short. But it would have been the right thing to do because the stock went down 15 points in 1 month. So as you can see, many times you will have some small minor losses, but they're quickly made up oftentimes with the very next signal or so that comes down the road. Now, had you missed that initial signal, well, there were always more signals being generated as long as you're in sync with the trend that you could take. And we look at here at SWK. This is once again an expensive stock, but I'm showing you this once again to show you that not every trade is going to work out great, but oftentimes you can make it back within the next 1 or 2 setups. Now, as we see here, at the beginning of this chart, the majority of bars were green, and this set up for 2 bullish engulfing patterns. Did they work out? No. Most likely you would have lost a couple of points on either one of those trades. But as we see here at the very bottom of the chart now, you are generating a bullish engulfing pattern, and bar number 2 is colored green. So it's a valid setup with the pet D. So you're out of those first trades, you've lost a couple of points, you decide to take this one, and in the next couple of weeks, it generates 4 points in your favor. So you quickly would have made up what you lost. So this is the backbone of all of our strategies. Once again, we do not sit here and preach that you're going to make so much percentage and you're going to do so well and you're going to buy that house at the end of the year. We do not preach that or believe in that. But we will tell you that when you have small-minded losses, these strategies are so consistent, they can get you back on track, usually within the next trade or two. Here's another example in JOY. This is kind of a mishmash. You have red bars, green bars, red bars, green bars. This is where a lot of our students get confused. And we say, listen, all you need to do is look for a specific candlestick pattern. In this case, we're looking at bearish and bullish engulfing patterns. But just look for those candlestick patterns. And as we see here, we have 2 bearish patterns that are validated. And there's 4 points in 3 weeks. Once again, here was a valid signal to go long. You would have generated a small loss because you would have gotten in and then would have had to switch and reverse. Now, if we look at a weekly chart, here is a weekly chart in Verizon VRSN. This is the same type of scenario where people will look and say, Steve, there's no trend here. All of my things that I've been taught, all of my indicators tell me I have to look for a trend. There's no real trend on this weekly time frame, so I'm not going to do anything. But if we apply the pet D, we see that the majority of bars are green. So that's telling us that we are actually in an uptrend. And guess what? We have a bullish engulfing pattern here that was in June of this past year. All right, so if you're trading this for your portfolio, for your IRA, you could have gone long on a weekly time frame, Verizon here, roughly about 65 and 30 points in the next 6 months coming into this month, okay? Now, did we know the stock was going to go up this much based off any news or any outside sources? No. All we did was listen to the strategy and the pet D. Now, this also can be applied to commodities. I don't trade heating oil, but the same scenario will work. We don't change anything. Here is a bearish engulfing pattern that is validated and confirmed by the pet D. So if you were thinking about going short heating oil in November, you have the full confidence to take this trade, and look what happened. Heating oil has been going down lower into the first week in December. As well, we can apply this to sugar. I do not trade sugar, but I'm just showing you how this can work for all you commodity traders out there. The majority of bars here at sugar, this was in October coming into November, were up. And coming back here, we knew as early as September that we were in an uptrend. So if you're in an uptrend, you want to take this first signal to go long. This is a bullish engulfing pattern that is validated by the pet D. And then there was another one later on here. Now let's look at a different market. I want to show you the E-mini S&P because I realize not everyone trades stocks. I'm going to start out with a particular chart here that's a little bit older, but this is going back on a weekly time frame back to August. Now I know a lot of people got burned in August because they said, well, Steve, when the market fell out of bed, this was just really terrible for all of us small traders down here, smart but small traders. We can't compete against these big guys with these hedge funds and this, institutional trading and this high frequency trading. It's not fair. There's no way we can make a dime. That's not really true. Let's start out with a weekly chart here because you would have known, even if you didn't trade the weekly minis, you would have known coming into August. This was at the end of July. We had a bearish engulfing pattern. Okay. A full bearish engulfing pattern that was confirmed by the pet D. And we all know what happened after that. So if you were looking at the higher time frame to tell you what to do on a lower time frame, well, it was screaming that we're going lower. So there was no reason to think that that massive sell-off that happened in August came out of the blue. The market, remember, the only thing you should be listening to, no news or no indicators, but the market was telling you, most likely, I'm going to be headed lower. So don't buy anything. All right, let's go to a smaller time frame. Let's go to a daily time frame of the E-minis. Excuse me. Most people were really mystified how, after coming down so strongly in August, how we went straight up in October. In fact, a lot of people thought we were going to roll over in October. But if we applied the pet D, Well, we saw here that the very first week in October, we changed colors to green and we had a bullish engulfing pattern. So right here, you were given a buy signal the very first week of October. So we knew that the market was going higher. And we saw that the market went up 160 points in 1 month. Okay? All because the Pet D announced it with a bullish engulfing pattern well before anyone tried to stop trying to pick tops. And then lastly, let's go to a 30-minute time frame. Okay, this was just a week ago on the 2nd and 3rd of December, the first week of December here. As we see on this 30-minute time frame, this was actually on the 1st. Most of the bars were green, so it's telling us we're in an uptrend on this 30-minute time frame, and we had a bullish engulfing pattern. So the E-mini on a 30-minute time frame roughly went up about 5 or 6 points this day. Now coming into the 2nd, we changed trends, and the Pet D started to have a confluence of red bars. Now at this point, we were given a bearish engulfing pattern, and it's confirmed by the Pet D. So you knew a week ago that most likely we're going lower. And if we had that really strong sell-off on the 3rd, well, we were well ahead of that. Most of our members who have this, the Pet D and the Candlestick combo, they gained roughly 50 points in just 2 days just using this simple technique. Remember, if you miss the first signal, don't worry. If it's a strong enough trend, you'll see a lot more setups along the way down. Now let's look at the Forex markets, because we can still see this exact same scenario, exact same candlestick pattern with the Pet D in the Forex markets. If we start here at a daily chart, this is an older chart of the euro dollar. We see here that once again, it doesn't really look as if there is any type of trend here, but we find that we have a bullish engulfing pattern. So how do we know whether we should take that trade or not? Well, we just add the Pet D, and it's confirmed. Remember, if you get a bullish engulfing pattern, bar number 2 must be colored green. You do not want to take that if bar number 2 is colored red. But it was colored green, so it gave you the confidence to take it, and the euro dollar went up 600 pips in 3 days. That's roughly $6,000 per contract. Now let's go to a different time frame. Let's go to a weekly time frame. This was coming into the summer here in June all the way up into September. We have a bearish engulfing pattern here in the Australian dollar on a weekly time frame. Should we take it though? Okay, how do we know it's going to be a good trade? Well, we never know if something's going to be a good trade. We can only try to increase our odds for success by adding something that has consistency, and that's the Pet D. So Pet D must color bar number 2 red, and it did. Okay, so it's a valid setup. If you would have gone short, you'd have gained 900 pips in just about 3 months, roughly about $9,000 per contract. And let's go into an even higher time frame. Let's look at a monthly chart of the dollar yen. This is going back to September, October of 2012, okay, about 3 years ago. All right, the dollar yen was colored red by the Pet D, but in September and October, we had a bullish engulfing pattern, and it met all of the requirements when you added the Pet D, because bar number 2 was green. So we knew as far back as September 2012 that most likely we're going to have a nice little run up on a monthly time frame in the dollar yen. Remember, this was like almost 3 years ago. And look what has happened. This is coming into this past month. It's 4,500 pips or $45,000. Now remember, we know that not everyone's going to stay in this for that long, but this is how much you could have stayed in, how much room you had to work with, and it's also showing you the power of the Pet D. The Pet D, well before any worldly conditions happened, any news, anything going on with the dollar yen came out, we knew that we had a buy setup. All right, so let's recap before we go to questions and answers. I know you probably have a lot of questions. Remember, we're only going to buy or sell candlestick patterns that are in sync with the trend, and especially with the Pet D. Remember, you can use indicators, patterns, different time frames to find out what the trend is. They're all just okay. I'm not going to say that they're terrible, but they're just okay. And you can start using those as early as the 15, 20 minutes from now when this presentation concludes. But why not go with the best? And once again, in my 38 years, I haven't found anything that works this consistent in telling me what the short-term trend is. That's the Pet D. I use it on a daily basis. Now, these are really important points to remember. This is not a complete strategy. All we did was show you a setup. Why? Because we didn't talk about where to enter. We didn't say anything about where your entry would have been on any of these setups, winners and losers. We didn't talk about where to place your stop, because I showed you a couple of trades there with some small losses, but where would you have gotten out? All right. And then lastly, we didn't even talk about advanced exit signals. We didn't talk about where to exit. Would you have stayed in for the long haul, or would you have gotten out real quickly with a quick gain? And what about money management? How many contracts? How many shares should you trade? These are all extremely, extremely important pieces of the puzzle to know when you're trading any strategy, regardless if it's one of mine, one of yours, or something from a different educator. You have to know all of these things. So all we presented today were the setups, just what you should be looking for. These were the high probability areas for entry or for selling. Here's what we're offering you today. Our end of year special. We're combining Primo candle trading strategy number 5 along with the PET D. This is our early trend detector. These are the two things I just showed you with all of these vast examples here that worked in any market and any time frame. Now this comes with instant course access. Okay, you're not going to have to wait for something to be shipped to you. You can be online and up and running in just a matter of moments. Detailed instruction, 5 videos. I go over all the entries, all the exits, and all the stops. Different places to enter, different places to exit, different money management tools. All this is included. This also comes with signal alerts, telling you when to enter, when to exit. This also comes with 4 PET D trading techniques. These are not strategies, but these are different techniques you can use with the PET D, in addition to trading a strategy you like. This includes both of the add-ons. In other words, you will get the automatic add-on that generates buy and sell signals for the candlestick strategy, as well as the add-on that colors the bars green and red. And then lastly, you're going to have correspondence with me. So this will be, you'll have lifetime correspondence so that you can discuss and email me whenever you'd like. Now remember, we talked about the end of year promises that we all make. We all say to ourselves, well, in 2015 in January, I'm sure there was a number of traders that said, well, you know what? By the end of 2015 December, I'm going to be doing so much better than I've ever done before. We're going to take that dream vacation, maybe buy that car I've always wanted, or do that addition onto the house. And I can almost say that the majority of you haven't met those goals. And don't worry, it's nothing that I haven't heard before. It's nothing I haven't gone through myself when I was first starting to trade. It's very discouraging and extremely frustrating because you put in a lot of work, you go to a lot of presentations like this, perhaps you spent thousands and thousands of dollars with other people and nothing has worked for you, okay? I really feel confident that this will work for you, this combo that we have here. This is our candlestick combo. In fact, a lot of people are always saying, well, Steve, this all looks well. I know you've showed a lot of different examples here in your presentation, a lot of different time frames, but I like to look at the news for confirmation. How about if some news comes out? How do we know it's going to be, not going to wipe all this stuff out? Well, let me show you something that happened recently with the news. And let me show you how, when you combine this, the candlestick combo with the PET D, how you see that oftentimes they will give you setups prior to news events. Now, Yahoo Finance reported that Pandora had a wide loss and as the cost jumped and the shares plunged after hours. This was at the end of October, a little over a month ago, okay? Pandora Media, provider of music streaming services, reported a bigger quarterly loss as content acquisitions cost nearly doubled. It sends its shares sharply lower after hours. The shares were down about 20% at 15.25 in aftermarket trading. So a lot of people say, well, Steve, when this stuff comes out, I'm sure your strategy and all these rules and the PET D all goes out the window, right? Well, let's look at the chart. Now remember, this came out on the 23rd of October. If we look at Pandora prior to that, someone would say, well, it's kind of headed a little bit lower, but not enough information to tell me what it's going to do. So I'm going to still continue to hold on to this stock if I'm long. All right, well, not so, because if we added the PET D, we see here that starting roughly around mid-October, the majority of bars started to turn red, telling us that we are now in a full-fledged downtrend. Telling you that, remember, you do not want to be long if you're in a downtrend. On top of that, guess what? 2 strategy number 5 signals were generated. A sell on the 20th and a sell prior to that on the 14th. Now, this was well before the news came out. No one called us up and told us to sell Pandora because some bad news was coming out. All we did was look at the candlestick and the strategy rules, and we applied the PET D, And as you can see, Pandora fell about 8 points or 40% in just 1 week after those setups. So I'm not going to promise you that every setup works in favor of the news, but it's been my experience in trading this for over 30 years that most of the time these tools will get you in advance of the news. So the news actually works in your favor. Now, also we provide you with signals, all right? You'll get email alerts such as this. Now this happened on the 20th of November, just a few weeks ago. This is the kind of alert you'll get. And as you can see here, circled in green, SE generated a sell signal using strategy number 5. All right, so how would we have applied that? Well, we see here that SE has a sell signal right here. The sell signal was actually generated on the 19th for entry on the 20th. So you're saying to yourself, well, I don't know. It looks like we've gone down, but maybe I think we hit a bottom here. This other guy that I listened to says that here's where support is, and here's where some Fibonacci level is, or here's where the volume spiked up. So this is telling me most likely we're probably changing trend right here. We reversed. We have a doji. So the way I look at it, we have a morning star here. So I think we're going up. This is a reversal pattern. We don't have to overthink things like that anymore. Okay, that's what gets you in trouble. All you have to do, if you want to take that setup, is apply the PET D. And we see here that the entire time the PET D has been coloring the bars red. So the PET D, as a translator of the market, is telling you that the market wants to go lower. So you would have the confidence to take this trade, and in 5 points the stock went down 20%, or I should say in 2 weeks the stock went down 5 points or 20%. Okay. Once again, we didn't know of any news. We didn't know what the market conditions were. We just listened to the market through the PET D and then followed the strategy rules. That was just a few weeks ago. Now let me show you something that happened today. This happened this morning, and I was frantically taking this snapshot roughly about 10 minutes before we started the presentation today. This was in the E-mini. We're looking at a 5-minute chart of the E-mini. If you look here in the lower left-hand corner, you'll see it's on 12/9 right here, the date. So this is coming into today's action on a 5-minute time frame. As you can see, we started up going higher and then quickly reversed, coming into roughly 9:35, just about 20 minutes before we started today's presentation. Now, if we apply the PET D, we see here how the PET D is such a finely tuned indicator for finding out what the trend is. Because on the very first bar, it colored it green and then continued to be green the entire time up until we got to roughly this level where it was telling you to get out and exit, because now we're going short because the trend is going lower. All right, so now we know the direction of the trend. We don't have to look at a higher time frame. We don't have to have all these convoluted indicators on our screen. We just have to have the PET D tell us what it's doing. Now we have to add some structure, a particular strategy. It can be any strategy, but in my case, I would rather use strategy number 5 because it works so well with candlesticks. So if we apply strategy number 5, guess what? 3 signals were generated in the first 2 or 3 hours of the day. Here was the first buy signal that would have given you roughly about 10 points to the upside to work with. And here was the first sell signal that would have generated about 20 points to the downside to work with. Okay? This happened just a few hours ago, people. So we're not trying to cherry pick things from 6 months or 8 months the way so many other webinars do. We're showing you stuff how well this works. So do you think using these techniques could really get your trading going in the right track for once starting in 2016? You owe it to yourself to start out the year with something that has a level of consistency that you know that your personal mentor uses on a daily basis as well. Something he's been using for roughly about 30, 35 years. So once again, here's our end of year special. This is our candlestick combo, Primo strategy number 5, along with the PET D tool. Now, once again, if you purchase these separately, if you purchase both of these just on your own and wanted to buy them separately, it would cost you close to $3,200. All right, that's how powerful and how popular these 2 techniques are. Here's what we're doing. For a limited time only, we're dropping this attendee discount down to $14.95, and this also includes a $97 per month payment. Okay. Now, the price of both of these, strategy as well as PET D, are going up in 2016. That's how popular they are. We have hedge fund traders who are interested in leasing this just for themselves. Right now, you can purchase this for a really great discount of a small payment of $14.95 along with $97 per month. But if you'd like to get lifetime access and not have to worry about any payments, you can have one full payment of $29.95. Okay, that's for both courses, lifetime access, along with my personal mentoring. So here's how to get this great deal. Remember, end of year special. You want to start out 2016 on the right track. I've just shown you charts in all markets, all time frames. I've shown you charts that are about 2 years old. I mean, two weeks old. I've also shown you charts that are about 2 hours old. Here's how to get more information. Contact my sister site, which is Pro Trader Strategies. All right, they're my sister site. They market and promote all of my courses and techniques. You can email them at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. If you want to get a particular plan, either a lifetime access or that discounted payment plan, you can contact them or email them. Best thing would probably be to call them directly. If you're interested in getting lifetime access, all you have to do is simply click on the link. Now, this link you see at the very bottom here is not live. You have to copy and paste that. But if you go to your chat box on the far right, you'll see there that they have posted a live link. All right, so that's all you have to do is simply click that on. It will automatically take you, and then you can get up and running and have 2016 to be a really consistent year. Now, I'm going to leave this information up as I open up the question and answer box and answer your questions, and I want to thank you for holding off. First question, yes, is this recorded? Yes, it's the question I get most often. And yes, we record this. But remember, if you want to take advantage of this special offer before prices go up and before we go back to the lower prices, you have to contact us soon. So you can request a link to this, but if you make your decision in the next 2 weeks, you may have missed this, okay? Hank asks, well, what programs does the PET-D and Strategy 5 work with? Great question, Hank. It works with MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use the live free stock data to run a free nightly traded chart. Okay, and we help you set this up with our tech support because of the way Thinkorswim is configured, you can't apply the indicators onto their charting package. But what you can do is use their data. At the same time you're looking at Thinkorswim, you could still use their data and just apply it to a Ninja chart, a Ninja platform. And we help you set that up. There's no extra cost for any of this, and plus we have a great tech support system that will put it together for you for free. So you can be up and running in just a matter of minutes, okay? Let's see. Next question. Hello, sir. The Forex strategies performance results for 2014 to 2015. Well, remember, a strategy doesn't have performance results, sir, because a strategy offers about 30% discretion. So we can only get performance results based off of a system. And a system means that you trade everything the exact same way each and every time. We don't teach or trade systems because, once again, in my 38-year career, I have found that there really is no consistency in systems. Most systems that I've traded, I've even taught some systems before I started specialist trading, most of them blow up and they lose everything. So I really don't believe, I believe that you have to be a part of the process. This is what we teach in all of our courses. I provide you with my 38 years of experience, provide you with advanced ways to trade, conservative ways to trade, very simple ways to trade, and let you decide. So everyone has a different way in which to apply these strategies. You can either trade them conservatively, aggressively, enter at a different spot, exit at a different spot. So we're not a systematic company. As I stated in the very beginning, we're an educational company. In order to verify and to systematize the way everyone trades, it would take us years because everyone trades this differently. So I'm sorry, we can't come up with any results because results for what market? Results for what time frame? Results for which type of trading techniques? Everyone uses these differently, okay? Let's see, Nick says, doesn't matter if the candles before the engulfing candle closes up or down. Very good question, Nick. No, it doesn't. In my opinion, that's another thing. We teach this in the course. So many people think that, well, in order to have a bullish engulfing pattern, bar number one must be down. And once again, I have found no consistency in that. You can still have it up as well. All that matters is that bar number two, open to close range, totally engulfs bar number one's open to close range. Bar number one does not have to be down. All right, and conversely, it's the same thing with a bearish engulfing pattern. That's a good question. Let's see, can you buy if the PET-D just turned green and it is a bullish engulfing candle? Well, yeah, well, that's what you want, DT. If, in other words, if it's a bullish engulfing candle, you want bar number 2 to be green. But remember, it has to be bar number 2. If you had a bullish engulfing pattern that was not validated, in other words, bar number 2 was red, you're not going to wait until it turns green. I wouldn't, I haven't really found any consistency in that, and I don't have a lot of our members that trade that way. So bar number 2 has to close, whether it's a 5-minute time frame or a monthly time frame, and it has to close green. Now, if it was a bearish engulfing pattern, then it would have to close red. Okay. Mahmoud, hello. Mahmoud is one of our students. He's only been a student of ours for a month or two, I believe, Mahmoud. And let's see, he just sent us an email. He says, I should say a question. He says, Steve, you don't believe it? I made 20 points in the ES today just by using the PET D without worry. Thanks, Steve. Oh, you're more than welcome, Mahmoud. And I think Mahmoud day trades the E-mini S&P, and he uses different techniques, but this is just showing you how powerful it is. It's a great trend identifier. And as I stated, whether you're trading one of my strategies, someone else's, you want to be in sync with the trend to get the higher level of consistency, as Mahmoud is talking about here. Now, I'm not going to tell you that Mahmoud makes 20 points in every trade. I'm sure he has some small minor losses every once in a while as well. But he has found a level of consistency because he knows how to find the trend now. And the trend is the best tool I found in nearly 40 years of trading is the PET D. I use it on a daily basis, and I'm just trying to share it with you because it's a great tool. If you're really thinking about finally getting onto that profit that you've searched so much for the last years, you're really thinking about it in 2016, the PET D along with strategy number 5 is a great combination to get you back on that track. Okay. Hussam is asking, how many strategies do you have? So we have a number of strategies. We have upwards of 10 different strategies for each different market. It all depends on which type of a trader you are. This is why we're not a systematic company. This is why we don't believe everyone should trade the same way every time. We have conservative strategies. We have strategies that trade candlesticks. We have strategies that trade Forex. We have strategies that trade E-mini. It all depends on what type of trader you are. And they're not systems. And once you learn the strategy, we teach you different ways in which to trade it so that you can become a part of the process. That's the only way you're going to become consistent, okay? Let's see here. More questions here. DT is asking, was WUBA a buy yesterday? You know what? I don't have it. I'm sorry. I don't have a live chart here in front of me, so I can't do this. This is a static PowerPoint presentation. But it's even better reason to purchase the PET D, so you'll be able to find that out. Let's see. People are asking me once again about signals. Hank is saying, can you only buy the PET D without the course? That would be something you'd have to ask Pro Trader Strategies. Once again, they handle all of the marketing of my courses. But please remember, you're getting, with this great $14.95 discount, you're basically getting strategy number 5 for free at about the price of the PET D. Okay, now that price of that PET D is going to go up in 2016. So you're not only getting that, you're also getting a strategy, which is a great candlestick strategy, strategy number 5, and then just with some monthly payments, you'll be right on track. So I think this is a great deal to have. This is probably, along with another one, our most popular combo. This is the candlestick strategy number 5 along with the PET D. Nick asks, can I have them set up on my Interactive Brokers charting platform? Nick, you can use your IB data and we get you set up on the NinjaTrader charts to run the PET D. It depends on what market you trade, but once again, this is all done for free through our support, our tech support system, and we all do it for free, and we all have it set up for you really nicely and easily. Frank asks, Steve, what is your favorite market to trade? Futures, options, stocks? Well, it all really depends on my schedule. When I first left the floor, I traded stocks, okay? Actually, when I first was on the floor, I traded nothing but options. Then I went to stocks, and then I pretty much moved over into intraday trading of stocks. And then lately, I've just pretty much maxed out on intraday trading of the E-mini because I don't have time because of my schedule for giving webinars and teaching and answering emails and talking to people. So it's too difficult to hold positions. And I'm the kind of trader who likes to look and watch them all the time. So the only way I can do that is by looking at small time frame charts, and the E-mini really fits in well with everything I teach, okay? Hossam asks, what strategy can we use for trading only stocks? Well, strategy number 5 works great for trading only stocks. I just showed you tons of strategy examples with strategy number 5. So I would say that's a great strategy. That and strategy number 4. 4 and 5 are the best strategies for trading stocks if you're just beginning with the Pet D. But remember, I would contact Pro Trader Strategies and they can set that up for you, because we currently have this really great deal for getting you back on track for 2016 with strategy number 5. I don't know if we have such a good deal with strategy number 4 going on right now. So it's probably best to contact them, one of the trading consultants they have there. Nick asks, does it work better on the Forex than stocks and the E-mini 500? There's no better, because once again, it all depends what time frame. It all depends what how you want to trade it. We have people that say, Steve, I use this combination here, number 5, along with the Pet D on 10-minute Forex charts, and I swear by it. We have other traders that say, no, weekly charts for stocks are the best. So there is no best. The only best is the market and the time frame that best makes you feel comfortable. That's the only thing that matters. So remember, don't try to systemize things. Don't try to make everything, the goal is everyone has to trade the same way. You will find out through our mentoring and through our courses what the best market and what the best time frame is to trade that suit your own needs. You don't have to trade the markets I trade. You don't have to trade the time frame I trade. I can almost guarantee you, if you do, you will lose money. That's why we don't believe in chat rooms or trading rooms, because most students make those into crutches, and you start to listen to what other people are doing or follow what the person is saying in the chat room, and you're taking yourself out of the game. That, in my opinion, is a recipe for disaster. That is probably the best way to lose money, to try and mimic what someone else is doing or take their control. Remember, I started out the presentation saying that the reason why most traders fail in my 38 years is because you're relying on an outside source to tell you what to trade, when to trade. I know this from firsthand experience, because that's what I did in my first 2 years of trading, and I couldn't make a dime. So my mentor said, Steve, listen, simplify your trading. Don't have all these indicators. Don't have to listen to news. Don't have to look at higher time frames. Just focus on the chart you're looking at and trust what we're teaching you, that it will work because it's consistent. Then you don't have to rely and listen to outside sources, because those things only serve to confuse most traders. Okay? Let's see. Let me hear. If you get a bullish engulfing on the chart in the middle of an uptrend and the Pet D is green, is it still a valid signal, correct? Yes. I mean, that is basically what you're looking for. You're looking for the Pet D to be green with a bullish engulfing pattern, okay? Let's see. Regarding the Pet D, what exactly mean the second? I'm not sure what you mean by that, Hossam. When you say the second, I was referring to the bar number 2. So in other words, when we're talking about this bar number 2, we're talking about an engulfing bar. So that's a 2-bar pattern. If we get a bullish engulfing pattern, bar number 2 should be colored green by the Pet D. If we get a bearish engulfing pattern, bar number 2 should be colored red by the Pet D. And that's it. That's all you need. Now, you also need to know where to enter, where to exit, where to place your stops in case it doesn't work out. These are all things we teach in the course and through my personal mentorship. All right, in closing here, I know that a lot of you, once again, have started out 2015 with all these hopes and aspirations, and I can pretty, confidently say that the majority of you have not met them. You've probably very discouraged, and 2015 didn't turn out anywhere the way you would have wanted it to, okay? If you really want to get back on track, we're starting out 2016 on the right track so you can look back and say, boy, I'm so glad I purchased this. I'm so glad I got this at specifically at a great discounted deal. I really urge you, strongly suggest to take advantage of this discount we have. The price is definitely going up for both of these, the strategy as well as the Pet D in 2016. All right, if you just purchase them right now without this discount, it would cost you about $3,200. We're dropping the price down to $14.95 with a small monthly payment of $97, okay? If you would like to purchase them with no payments for a lifetime access, it's $29.95, okay? This is a great, great deal. I use these myself on a daily basis. And you're getting 38 years of personal experience as your mentor. So come on board. Let's start out 2016 where you won't have to look back and say, boy, this year was an entire waste. Everything I purchased lost me money. You can look back and say, boy, I really learned about trading the markets entirely different than I'd ever been taught before from someone who's been trading for that long. And I'm finally starting to see results. This is what we really feel confidently about, okay? So if you're interested, contact Pro Trader Strategies. They'll set you up with that deal, or you can become a lifetime member and just pay one lump sum and you won't have to worry about any other costs. It's yours for life. And I'll be your mentor for life as well. All right? I'll leave this information up. In closing, I want to thank you so much for attending today, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.